Robinhood, the trading app that brought stocks to the masses, just launched its own blockchain. In its first month, it's already locked $774 million in value. One memecoin on the chain surged 120% in a single week. Here's how Robinhood is quietly building the next crypto super app. Robinhood chain went live just weeks ago, and it's already one of the fastest growing Layer 1 blockchains by total value locked. For context, it took many established chains months or years to reach this level. The chain is built on a modified Cosmos SDK, optimized for speed and low fees. The memecoin driving this frenzy is CashCat. Why does Robinhood need its own blockchain? The company wants to reduce reliance on third-party networks like Ethereum and Solana. By controlling the base layer, they can offer zero-fee trading, instant settlement, and integrate DeFi products directly into the app that 25 million users already have. Robinhood Chain uses a delegated proof-of-stake consensus mechanism, which means users can stake their HOOD tokens to validate transactions and earn rewards. The chain can handle over 10,000 transactions per second, making it competitive with Solana and Avalanche. The native token, HOOD, is used for gas fees, staking, and governance. It's also tradable on Robinhood's main platform. Since the chain launched, HOOD's price has risen 45%, adding roughly $2 billion to its market cap. But the real story isn't just a memecoin. Robinhood Chain represents a major shift. Trading apps are becoming full-stack crypto ecosystems. Users can now swap, stake, borrow, and lend without ever leaving the app. It's a direct challenge to centralized exchanges like Coinbase and Binance. Robinhood also recently launched tokenized versions of SpaceX and OpenAI shares on its chain. These are synthetic assets that track the private company valuations, allowing retail investors to get exposure to pre-IPO giants. The tokenized SpaceX shares alone have seen $200 million in trading volume. This move puts Robinhood in direct competition with platforms like eToro and Public.com, but with a blockchain twist. Because the assets are on-chain, they can be used as collateral in DeFi protocols, opening up leverage and yield opportunities that traditional brokerages can't offer. The $774 million TVL on Robinhood Chain is spread across a handful of protocols. The largest is a decentralized exchange called HoodSwap, which accounts for over $400 million. Then there's a lending protocol called HoodLend with $250 million, and various yield aggregators making up the rest. But rapid growth brings risks. Critics point out that most of the TVL is in memecoins and leveraged farming positions, which could evaporate in a market downturn. Robinhood Chain's success is currently tied to speculative frenzy, not sustainable DeFi usage. Security is another concern. Robinhood Chain uses a validator set that is initially controlled by Robinhood itself, raising questions about decentralization. The company says it will gradually open up validator slots to the community, but for now, it's essentially a permissioned network. Despite these concerns, the chain's growth has caught the attention of major investors. Venture capital firms like Andreessen Horowitz and Paradigm have already deployed capital into projects building on Robinhood Chain. One analyst estimates that the ecosystem could attract $5 billion in TVL by year-end. Meanwhile, the broader crypto market is watching. Bitcoin is hovering around $65,000, and Ethereum is struggling to break $3,500. But the real action is in new chains like Robinhood Chain, where retail users are piling in looking for the next 100x. CashCat's 120% surge is just one example. Other memecoins on Robinhood Chain, like HoodDog and RoboFrog, have also seen triple-digit gains. The chain has become a hotbed for speculative trading, reminiscent of the Solana memecoin mania in 2024. But there's a method to the madness. Robinhood is using the memecoin hype to bootstrap liquidity. Every trade on the chain generates fees for validators and liquidity providers, creating a self-sustaining ecosystem. The company itself doesn't charge trading fees on the chain. The timing is strategic. On July 30th, Microsoft reported strong earnings and its stock surged 8.5%. The same week, Meta slumped 9% on weak guidance. Amid this volatility, retail traders are looking for alternative stores of value, and Robinhood Chain offers a playground. Robinhood also benefits from the broader tokenization trend. BlackRock just launched 2 tokenized money market funds, BSTBL and BRSRV, on Ethereum. JP Morgan, Bank of America, Citi, and Wells Fargo are planning a shared tokenized deposit network for 2027. The message is clear: Wall Street is going on-chain. Robinhood Chain is positioned to capture a slice of this institutional migration. If tokenized treasury funds and real-world assets start trading on its chain, the TVL could explode. The company has already partnered with Securitize, a leading tokenization platform, to bring compliant assets on-chain. But competition is fierce. Coinbase's Base Chain already has over $8 billion in TVL and a mature DeFi ecosystem. Solana has $15 billion. Robinhood Chain is still a MENO, but its user acquisition advantage is huge: 25 million existing users who can onboard with one click. The user experience is the killer feature. On Robinhood Chain, you don't need a separate wallet, seed phrase, or gas token. Your Robinhood account acts as your wallet, and fees are deducted in Hood automatically. This removes the biggest barrier to entry for mainstream crypto adoption. This simplicity is attracting a new wave of users. On-chain data shows that over 60% of addresses on Robinhood Chain are first-time crypto users. They're not degens from other chains, they're Robinhood stock traders trying crypto for the first time. However, regulators are paying attention. The SEC has not yet commented on Robinhood Chain, but the tokenization of private company shares could trigger securities laws. Robinhood is reportedly in discussions with the SEC to ensure compliance, but the outcome is uncertain. The cash cat frenzy also raises questions about market manipulation. The token's price surged 120% in a week with no clear utility. Whales hold over 40% of the supply, and some analysts warn of a pump-and-dump pattern. Robinhood says it monitors for suspicious activity but doesn't control on-chain trading. Despite the risks, the momentum is undeniable. Robinhood Chain now has over 500,000 active addresses and is processing $2 billion in weekly volume. If it maintains this growth, it could become a top 10 blockchain by activity within 6 months. What's next? Robinhood plans to launch a developer grant program to attract builders, and a cross-chain bridge to Ethereum and Solana is in the works. The goal is to create a multi-chain hub where assets flow freely between Robinhood Chain and other networks. Longer term, Robinhood CEO Vlad Tenev has hinted at integrating artificial intelligence into the chain, using AI agents to automate trading strategies and yield farming. This could create a new category of smart DeFi that adapts to market conditions in real time. For now, the story of Robinhood Chain is a story of speed and speculation. $774 million locked, a memecoin up 120%, and a trading app turning into a blockchain powerhouse. Whether it lasts depends on whether real utility follows the hype.